Hello traders, FX Pip Collector here. Today is Monday, December 2nd. I'm going to be analyzing the Aussie US dollar starting on the monthly, working my way all the way down to the 1 hour time frame for the full top-down analysis. But also don't forget to check out my website, fxpipcollector.com, if you would like to get access to my swing trade setups, my daily members only live streams on Zoom, and my 34 video trading course all included for only $30 per month. So the Aussie dollar just closed its monthly candle, pretty bearish looking still. Now we still don't really know whether this is going to be like a running correction, which means it would make a higher low and continue up for a wave Y, or whether it's going to turn into like an expanding correction and make a lower high before it actually turns back up and makes the wave Y. Either way, we should better recognize it when it does turn up. Going down to the weekly time frame, now we are at the 78% Fibonacci retracement of this last move up. Definitely probably going to be a pretty good area of resistance, but the trend is definitely still down, and we're most likely either in a wave C of a running or a wave C of an expanding pattern like I explained on the monthly. Heading down to the daily time frame, definitely still in a downtrend even on the daily. Now we do have a nice little stretcher level right now, but technically we're right in between these two highs right here, or these two swings. So this move up right here very likely could just be a correction to this last move down, so we definitely need to keep an eye out for more sorting opportunities, because even though we're at the 78%, the trend is definitely still down, and we should still primarily be looking for sorts in a downtrend. Going down to the 4 hour time frame, the market has been in a major range, at least the dollar pairs have, mostly because we had a major US holiday last week, and this is exactly what happens on a holiday week, is pretty much nothing, just up and down and all around. The trend is still down on the higher time frame, so I am definitely still looking at my Fibonacci levels for possible shorts, hopefully for the continuation of the downtrend. Taking it down to the 1 hour time frame. On the 1 hour time frame, we do have a nice little 78% fib bounce. We do have a nice little break of structure to the downside. So if you do trade the very short time frames, you probably could possibly get some more shorts out of it. I think that this move down is probably not the continuation of the downtrend, but based on the higher time frames, the trend is down. So if we do get any opportunities to go short, we better take them and hope for the continuation of the downtrend. Now, the way the market has been, I wouldn't be surprised if the next move down is actually another A, B, C correction, and it actually turns back up and does something like that before it actually does end up going down. But like I said, I'm primarily looking for shorts. I would be looking to go short at all these little Fibonacci bounces right here, and then scaling out a part of my position to become risk free. And then if it goes back up, and turns out to not be the end of a correction, you end up losing no money. If it really is the end of a correction, then you just hold on to your trade and just continue to enjoy the profits. So don't forget to join my free Discord group, which is linked down here in the corner. And as always, thank you and happy trading.